Good day, everyone. Alice here from Safi Financial Network. Today is June 9th, 2023. Here is weekly edition for our weekly analysis. As usual, we're coming with a S&P 500 weekly chart. But before we get started, I just want to talk about some interesting pivotal points are coming to lots of indexes and lots of markets. We will get in a bit for weekly and daily chart for different indexes, gold, precious metals, and also I should say some basic materials like a copper. We have got some interesting analysis for them as well. I'm not sure if I cover copper in this video, but basically I just want to say we are getting into very, very critical seasonality time for the market, especially for the stock market indexes. Next week we will have CPI announcement coming on Tuesday, I believe, and Wednesday we will have FOMC meeting. Lots of federal banks, they increased the rate, like a Bank of Australia increased the rate, Bank of Canada increased the rate last week, and everyone just to keep an eye on Federal Reserve of US to see if they increase the rate as well or not. So we will see how it goes. I believe they're going to pause, but basically market and Federal Reserve don't care what I believe. So we should just wait and see how it goes. But based on the chart, so let's go to the chart. So here is the weekly chart, and just forgive me about the regular chart that I have because of my broker actually is in maintenance, so I can't give you the one that I have before, but this one is okay as well. So weekly chart, we got a positive candle for the weekly chart. We are getting into the August top, and also this is kind of like interesting. This is the cycle that I show you at the beginning of the year as like a forecast for 2023. And I believe this is going to be a cycle wise. This is not going to be a forecast pricing wise, but you see, I said March would be the bottom of the market. So basically we nailed the bottom, and right now we are just getting into a corrective move to the downside, which is the June period, and we are pretty close if the correction is not started. So we are getting into the corrective move to the downside. Very, very interesting level. If we take out this pivotal point, I should say market is in bear market. So everyone needs to keep an eye on this 4,050 level for S&P 500 or even 4,000 level on a weekly basis. So if we get a weekly close below 4,000, 4,050, we should say we are at the bear market. Right now, we are at decent shape. We are just hitting our target, which I believe this is going to be 4,300 is going to be the target for the year. More conservative stretch can be 4,400, but I believe this 43 to 4,400. So that's going to be the top information for the market for 2023. So we are basically at the top of the market 2023. And I'm not sure even if we get to this level, to this pivotal point, which is going back to March 2022, the most important pivot right now is the August top. And if we get above this, so probably market will have a pullback to the upside, but I'm not sure for S&P 500 we get above this. So basically I'm just looking for some kind of like a choppy market to the downside for the next 2-3 weeks, especially getting into Fed meeting, and after that we should see kind of like a choppy sloppy to the downside. But for the July period, we should see a bottoming formation for another hike to the upside. I'm not sure if it's going to be a double topping formation, just to stretch a little bit to the high to get close to this August top and then coming down, or we can just pierce through to just the stop hunt everyone, just putting stop losses here and then coming down. But based on my analysis, we are pretty close to the top information of the market for 2023. And if you just look at my monthly analysis, we need to get close monthly above 4,200. Right now, we are above 4,200, but I'm not sure for the month of June, we get close above 4,200. So if we get down below 4,200, monthly chart, that's going to be another rejection for the 4,200, and that's going to be kind of like an ugly, I should say, price action for a market especially S&P 500, the bigger chart. Right now, weekly chart shows kind of like a uptick. We will give market benefit of doubt, but again, we are getting into the cautious mood, and everyone needs to be patient for the next 2-3 weeks, at least if you're just loading with yourself with technology stocks. So here's the daily chart. As you see, gapped up. We close at 12.12% today, 4.95% up. But look at the candle. The candle is red candle, and also it's kind of like a forming a top information for S&P 500, if you ask me. So we are getting into the August top. We are getting into this big supply area, and right now this demand just a breakout to the upside, but fail to the downside. So if we get back, I'm just saying, if we get back here below this consolidation, which probably happened during Fed session, I don't know if it's going to go up and coming down. That would be pretty bearish. But if we get down below this, I should say we are getting all the way down to here, to this area, which is a 4,080 to 4120. So that's the level of bottom information that I'm looking for. If we get, again, daily close even below 4,000 or 4,050, so watch this number, 4,050, then we should see we are getting back to the bear market. And I know we are just getting a bounce here, but this is not a good price action. We shouldn't get close below this. If we get close below this, even some people are just drawing trend line here or something like that. No, this one doesn't work because of the bigger picture tells us we are getting back to the bear market. So just be careful on that one. Moving on to the Nasdaq. Nasdaq, it was a leader of the market again, cycle wise. We are getting into a danger zone. Then we should see a pullback to this area. Moving to the weekly chart, let me just show the weekly chart. So weekly chart, we got a doji bar on the top. So here is very, very important, just because we stretched above August top here with a nice surge to the upside, gapped up. So this is very, very interesting. Last week we got up here, gapped up here, but this week we are kind of like a forming, not having followed through. We ended up to the red candle, and also we're getting to this wide range bar here. So those are very, very interesting to see. I don't have a stochastic here, but if you look at the stochastic momentum, it's pretty overbought condition, and you get bear reversal to the downside. So I believe even if you count with Elliott wave, this is going to be a 5 wave to the upside. So this is a 1, 2, 3, 4, and this is a stretch 5 to the upside. And this one is down. So we should see ABC corrective move to the downside for possible move for another rally to the here. I believe this one can go down all the way to here. For the Nasdaq, we can see a deeper correction, but we are getting to this demand area, and then we can just see another rally to the upside for the summer rally. So we should see July, August could be kind of like the last rally for the market, at least the last significant rally for the market in 2023. And then we should see a very, very dangerous, I should say, month of coming in September, October, especially November this year. So everyone needs to be careful on that one as well. Moving on to the daily chart. So daily chart, you see that. So we got just appears to above this pivotal point, but reversing back down. So market just gapped down, gapped up, but failed to hold. And we are just closing 43 points to the upside just because of the gap, but this one doesn't have enough momentum to the upside, I should say. Even if it get close below this, it can go all the way down to here to this gap area, which is 13,500 to 13,800, and even we can see a bounce and then coming down to this demand area, I should say 13,000 area. That could be kind of like a bottom information for the next move to the downside. So just take a snapshot of this. I'm gonna just post in my channel as well, so we'll see how it goes. But I believe this is gonna be the next scenario for a corrective move to the downside. It's not gonna be a crash. It's gonna be a corrective move. It's gonna shake out some people who are just buying and getting into the FOMO, but I don't think it's going to be a crash for now, at least at this stage of the game. We will give market benefit of doubt to move higher, and this corrective negative move could be a last, I believe, buying opportunity for the market. Dow Jones Industrial, a better shape. If you move to the weekly chart. So weekly chart, I just mentioned before, here's the top bottom information. And right now we are just in very, very nice scenario for the upside. I should say Dow can have like a nice reverse head and shoulder, and this top information is kind of like a breakout level. So even if we see another reverse head and shoulder here, so let me just clean up a bit here. So we'll see here is the reverse head and shoulder, and if we get close above this 34,000, that would be pretty spiky price action to the upside. I should say Dow Jones can hit a double top or even new all-time high here, while the other indexes are lagging. So I should say money is flowing into some defensive, predictable defensive names, and that we should see a rally, especially for like energy, like banks, like some defensive names. Like I'm not saying military defensive, I'm saying consumer staples like a Coca-Cola, PepsiCo, McDonald's. So they are getting into the hype again for this summer rally. So, and also TLT as well. We will get back to that one. Bond is gonna just outperform nicely in this summer rally as well. So we'll see how it goes. At least this is my analysis. So moving on to the daily chart. So let's move on to the daily chart. So daily chart has like nice follow through. So compared to the other indexes, we didn't get enough momentum, but at least it just closed a green candle, not a red candle. The other one ended up positive, but the candle wise, we are just a red. But this one right now, we are just getting above this. So we need to get above, as I said, 34,000, sorry. So 34,000. So that's going to be the bottom line for the Dow Jones, especially when we get there. And if we close above this, that could be kind of like the critical point, 34,000. If we get above this and then coming back down, back test above this rectangular, we should see a buying signal, a nice buying signal to the upside. So we will see how it goes. Right now, we are just sitting on the side. We just accumulate some positions. I'm kind of like a rebalancing my portfolio. If you're not in my channel, just 25 bucks a Canadian monthly. This is a fantastic deal. You will get my insight about my real investments, about my real positions, about how I rebalance my portfolio based on different conditions in the market. So you will give lots of insight from me. If you're interested, just direct message me. I'm gonna help you out to join to our beautiful community. Moving on to U.S. Bond yield, which is this is a treasury bond. Again, bond yield is getting back up. So it's kind of like 1.79% to the upside. I believe bond yield is just forming for another hype to here, probably to this area, which is 480. So that's going to be the scenario. And we can see this one as a top information. Again, I'm not looking for a kind of like a new high here. I believe this bond yield topped here, and we should see just this one as like a second high, and then this one can end up to the lower low. So, but we need to see how this one is reversing down, but this can accumulate more into TLT. Treasury, it was negative today, but look at the candle. So bond yield was 1.79% up, which needs to put lots of pressure to Treasury, right? Treasury and gold. But Treasury actually didn't act very well. Didn't act very bad. So this one, just hold up for now. This is nice, I should say, a bullish consolidation here. And this is a pull. If you see a pop, especially Tuesday session or Wednesday session, then we can see this one is getting back to here, to this area. And even this one can go all the way up to here, 108, and then we will see how it goes. But even this movement to here, that could be another buying opportunity for here, because this is, I believe this is going to be the bottoming formation for bond in the long term, and we should see lots of bullish price action for bond coming down the road, because we are at the end of the hiking cycle for the rate, and rate should come down. And the question is when. Even if they pivot, even if they don't pivot, they just pause, that's going to be a bullish signal for treasuries, and also bullish signal for gold. Gold, I'm just looking, gold had like a nice uptick here, but coming down, fail. Still looking for this downside to here, which is low 1900, 1920. That's going to be the pivot for the gold. I believe if this one goes down here, or even here, this trend cannot be respected. This one can go down here to here, but at least we are above this pivot. So as long as we are above this pivot, it's going to be a bullish signal for gold. Any corrective move could be a buying opportunity, if you ask me, especially for the miners as well. So we'll see how it goes. Moving on to the US crude. Crude just a downtick today. Nothing spectacular. This one is getting into kind of like a bearish momentum. So we'll see how it goes. VIX just showing the bottom information. As I said, VIX $12 to $13 could be a good play option. So if you want to play option here, I don't think it's gonna be a bad idea. You don't I should say, you shouldn't expect too much a spike here. You should just expect something like this. So a bounce to $20 VIX could be sufficient, and it's going to be more than 50%, 60% to the upside, especially for the option players. It could be more than that. So make sure that don't over allocate yourself, but this could be a nice price action for the VIX, especially if you're just expecting the downside move for the market. At least this downside move could be a corrective move and can just give us a nice spike to here to $20 area for the VIX. DXY just the uptick today, nothing bad, nothing good, just a consolidation here. So dollar is getting strength, and this should go to more to the upside. I'm not sure even if we get to above this pivotal point. So this is kind of like interesting, because we are seeing this one as a like, I don't know, if this is gonna be a W pattern, or it could be just a triple top here and then coming down. I should say the second scenario is going to be more probable to the downside here. So we'll see how it goes. But dollar is going to be a sideways consolidation long time here. I'm not expecting dollar is getting back above this high here, but I'm not looking for kind of like spike down to here for the short term. Yeah, we can get there to 95, 96, which is going to be a fantastic buying opportunity, but not right now. So right now, dollar should be stay here for a while. Moving on to the technology sector. So Apple, after yesterday's surge, today we had a pop to the upside, but didn't follow up probably. So this one probably is going to be a top information right now. So we are getting the second high, which is the lower high ideal scenario for the downside. Any close, I should say, below this 176, 174, that could initiate a downside move to 63, then 150. I should say Apple can go all the way down to here, to this 160, 168 for a next move. Even lower here, that could be a possible scenario, 150. So I'm just looking for kind of like a buying opportunity, first buying opportunity around here, 150 to 140. But we will see how it goes. If Apple is stretched down to here, that's going to bring down the Nasdaq to the downside, which is going to be a possible scenario. Again, I'm not looking for a crash. I'm just looking for a corrective move to the downside. Amazon 82 cents loss today, so nothing bad, nothing good, just inside this wide range bar. It's kind of like a weird price action. It's not a bearish or bullish consolidation. It's just a sideways. Meta had another uptick today, so it's kind of like a forming the top information. I know I mentioned it before, but Meta, this type of price action is kind of like a weak, and we're just seeing the momentum is lost in Meta, and this one can go down. I just cut a little bit my position here below 5% right now, so I'm just allocate more in some defensive names to just protect myself. But still, I'm looking for kind of like a buying opportunity for Meta if it goes down to here. So we're just very up there, so I'm not gonna buy her. I'm just holding my position, keep holding. Microsoft, the same bearish consolidation. So this is a wide range bar, just forming a bearish consolidation. Any pullback to here is going to be a probable for the next 2-3 weeks. Google 9 cents up, the same price action. So we're just holding off here for now, but it doesn't have a momentum to the upside, just a wide range bar, so forming a bearish consolidation. So this one can break down to here to 112 to 116, which is going to be a possible scenario for Google. Netflix, again, this one just popped up and then failed. So this is another top information for lots of stocks. Netflix has a strong price action. To be honest, if you ask me, this pullback could be a buying opportunity. So, but again, this is overstretched, overbought, and we should just take it into our consideration that we need to see a pullback of these stocks. Tesla hit our target. So we talked about this. So look at the kind of like, I should say, not exactly, but pretty close to our target, which is 254, which is this gap. And look what happened. So just a pop up and then doesn't have follow through momentum. It just go down all the way to here, 244. I believe this is a top information. This is a topping candle, satisfy our upside target. So it can go all the way down to here. Still, there is going to be a possibility for this area for Tesla. So we'll see how it goes. Moving on to semiconductors, SMH. So this one, again, popped and then coming down. It doesn't have follow through. SOX, the same pattern. This one popped, coming down. And NVIDIA, it was pretty interesting. TSM, the top information, look at the shooting star, gapped up, doesn't hold up pretty well. And AMD, the same price action, it's better, but again, it's not that strong. I'm looking for kind of like this is the topping island reversal to the downside. We will see how it goes for the next weeks. NVIDIA, this one, to be honest, is in danger zone, guys. If you don't allocate yourself weight, if you have position, I'm just suggesting you to just cut your position a bit. This one is overdue for corrective move. So you can buy this one cheaper. If you have it and you just keep holding for now, congratulations, you made tons of profits. Don't be greedy. Don't be greedy, okay? So just cut your position. I'm not saying sell the whole entire position. Just cut your position. If this one is coming down to here, to this area, which is especially this consolidation before to the upside, or even lower, like anywhere around here, that could be kind of like a buying opportunity. I would buy if NVIDIA goes below $200. So you should always have like a cash on the side. But again, this is kind of like a tricky, hey guys, I'm not suggesting anyone to do exactly what you should do. I'm just telling you my advice that this could be a good option for you to cut the position, just take a profit on the side, hold on the cash, because we will have a corrective move for the market. So you will have lots of good opportunity next 3 weeks. I'm not going to promise, but that's going to be a high probability for the next 3 weeks. Texas Instrument coming down sharply. Probably that's going to be the leading for the semiconductors, Lam Research as well. So these two stocks are coming down sharply. Moving on to the financials, this is XLF, which is a spider for the financials, moved pretty well. Like Dow Jones, as I said, hold up pretty nicely. And these ones are just a holding up for now. They are not showing the top information. They are kind of like a showing sideways consolidation for the next breakout to the upside. So we'll see how it goes. KBE, large cap bank ETF, this one just a pullback to the downside. Probably it can go even to here, but that's going to be probably the setup for next move to the upside. KRE, 60 cents to the downside. Nothing bad, nothing good. This needs to just take its time for more consolidation for $49 to $50. JP Morgan, this one hold up pretty well, 28 cents to the upside. If you just go to the weekly chart, so because lots of people look at that, so this pattern is pretty bullish. So Don't look at the daily chart. This pattern, wide range bar, just a consolidating here. For this wide range bar, this is a nice pattern for here for 46. So 146, this gap could be a possible scenario. And also bigger picture, look at this. So this is a nice cup and handle. And if we get any close, weekly close above 144, that's going to be interesting to see this one can hit to this wide range bar again, 162. So we'll see how it goes. But some people are just focusing on the daily chart, and they're just saying this doesn't go anywhere. Yeah, this doesn't go anywhere just because we are at the bigger picture, bigger time frame pattern, and it takes time. Weekly pattern takes time. But when it triggers, it's going to just pay it off very well. Goldman Sachs, 55 cents to the upside. Nothing bad, nothing good, just consolidation here for the next target. Wells Fargo, just a 24 cents down. Citigroup, 64 cents down. This one is in corrective move to the downside, and possible scenario we can see here to another sub 32, then find out the bottom there. Moving on to the gold miners, which are kind of like they are showing leading for the gold. So right now I'm just looking for another probably deep down to here, forming this reversal divergence here with the RSI. If RSI shows a divergence here, that would be kind of like the bottom information for gold miners. I believe gold miners are kind of like a leading the gold price right now. GDXJ, the same pattern, better, but it's kind of like a consolidation. If it goes to the lower low, you shouldn't be panicked. AEM, the same pattern. So we'll see how it goes. Newmont, 58 cents to the downside. It's kind of like a forming bullish consolidation. It's just getting back below this pivot, which is not bullish, but at least we are above this pivot, which is neutral, I should say. Franco Nevada, this one is in consolidation phase right now. Gold Barrick is the same. So this is very, very kind of like a frustrative consolidation. Right now, we'll see how it goes. Moving on to the energy market XLE. Spider for energy. This one is coming down today along with coal and along with crude. XOP, which is oil and gas exploration ETF. This one is coming down. OIH, $1.79 down, just a consolidation phase. Exxon, 80 cents down. Chevron, 38 cents down. Oxy is 39 cents down. So this one, they are not doing well. This is a very, very choppy, tricky. Lots of confusion is happening with crude and oil. So we need to just be patient on these ones. REIC just coming down. And this is kind of like a consolidation phase as well. So you see, stock doesn't go anywhere since February. So it's just in no man's land. Like crude actually didn't go anywhere since beginning of this year. Okay, I think I covered everything. I've got some more videos for the Dow Jones Industrial Average Transportation Index, which is pretty interesting. That's why I'm kind of like bullish for the Dow Jones. And also, probably I will cover, if I have got the time, I will cover Chinese ADRs and the JD.com and Alibaba. I know lots of requests from there, but they're just forming a very, very nice bottom information. And I believe that they're going to be outperforming while the US market is kind of lagging, especially for the next 6 months or so. We'll see how it goes. Okay, I believe I covered everything. If you have got any questions, just put your question down there. Have a wonderful weekend. See you on the chart. Bye-bye.